Good afternoon, everyone. I'm Stacy Scott, and I'm here with Graham Wickham, President and CEO of Wickham Financial and Insurance Services, and we're back with you today for our weekly wrap-up. Now, ordinarily, we talk about what happened in the market last week, but today we're going to mix things up and do a little different spin on things. Graham, can you tell us what's going on in the market right now?
Yeah, thank you, Stacy. Thanks for everyone listening to the call. Yeah, I think we don't want to spend a lot of time talking about this last week. Not that it wasn't a great week. The market drifted higher. No great economic news that was being presented out there, and everyone was just getting ready to welcome the holiday. So that's behind us. Let's focus on today. And I think the biggest thing that I had talking to my team prepping for the call is kind of where we're at in the market. We've had a great year on the averages. The S&P is up about 23% The Nasdaq's up well over that. We saw the Russell really jump up the last 2 to 3 months of the year and really start to participate. I think up like 18-20% over this last couple months. Really saw a lot of sectors that underperformed previously in the year really start to participate, meaning those laggards really started to catch up with some of the leaders that started out the year so strong. So let's talk about kind of where the market is. And when I say the market, I'm going to talk about really more of the equity side of the markets, right? So the S&P, the Nasdaq, the Russell, those are going to be kind of the areas that I'm going to be talking about. Doesn't mean the bond market is not going to have some volatility too, because the bonds have moved up pretty quick, pretty fast with the yields moving down. But we're looking at 3 to 4 different things that kind of giving us a clue that maybe we're set for a pause that will refreshen us for a 2024 market rally. Right? So what are we looking at? We're looking at volumes. Volumes are low right now because it's the holidays. So we got the NASDAQ volume about 53% of the 30-day average. The S&P is about 74%, and the NASDAQ's about 50% of its 30-day average. Another marker that we might look at is what's called the S&P oscillator. Anything over a 4% or north of that, especially if it's north of 7, which is where we're at now, and it's been that way for a good little period here, a couple weeks, a couple days over 7, that would give us a really strong clue that maybe in the short run, we're just a little bit ahead of ourselves. We also want to look at RSIs, relative strength indicators. And I know these are a lot of technical terms. I'm not asking you to understand everything, but just get the gist of what we're seeing out there. Anything above a 70 would give us a hint that maybe something's just overbought. Anything at 30 or below would be oversold. And we're got a reading on the S&P of about 73. So that's given us an overbought signal right now, as of yesterday, and a bit more today. If we look also at generally kind of the direction of the S&P, like on its 50-day moving average and its 200-day. On its 50-day moving average, it's up over that about 6.2 as of Tuesday, and it's up about 9.5% above its 200-day as of Tuesday. So that would again indicate that maybe in the short run, we're just a bit overbought. Doesn't mean that a flag is going to wave. We got some big correction coming. It just might be a pause that refreshes. It might be an opportunity to buy some of the things that maybe you feel that you missed or you want to own at a little bit better prices here in the shorter run. We'll just have to see if it works out that way. Usually the markets don't go straight up forever, right? Stacy?
Thank you so much for that information, Graham, and thank you to everyone for joining us today. And one thing I do want to go ahead and put out there is that we have elected to have our upcoming Lunch and Learn webinar. Instead of having it right about this time in the month, the end of the month, we are going to bump it ahead to the second week of January. We're going to have it on Wednesday, January 10th. At 12 o'clock noon, and that's Eastern Standard Time for those of you who are in other time zones. And Graham, why don't you tell us a little bit about why we made that decision?
Yeah, again, not to drag this out, but we thought this was such a special call. We wanted to really add and focus on it. We really feel like we're entering a new era here, an era where the Fed is on the side of the market with lowering interest rates, at least signaling a pause right now, and we're past COVID. I think I can honestly feel that we're past it. It's not completely gone, but it's not everything, right? So I think we are moving to a new period, and we want to spend some extra time on that.
Okay, so everyone, just go ahead and mark your calendars for Wednesday, January 10th at noon, and I'll be sending out an email with more detailed information and a link for you. But in the meantime, always feel free to check out our website and social media, because we'll keep you posted on everything that is the latest and greatest on those. So thanks so much for joining us today. We're looking forward to see you next week and continuing this financial journey together. Take care.
Take care. Happy New Year.